Nigerian currencies showed some strength in the Nigerian foreign exchange market, while the African currency dipped its lowest level since February 2022 in the global currency market. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okeri. The Nigerian Naira strengthened by 1,527 against the US dollars on official Nigerian foreign exchange market. The Central Bank of Nigeria trading window for foreign currency. CBN data shows that the rate improved from 1,532 Naira on Monday, a modest gain of 5 Naira. This positive development at the Nigerian official market coincide with a decline in the country's external reserve, which fell $3.05 billion in the first half of 2025. In particular, the reserves decreased from $40.88 billion at the end of 2024 to $37.37 billion at the end of last month. However, on the black market, the Nigerian currency declined to 1,585 Naira to a dollar on Tuesday after closing at 1,570 Naira to a dollar on Monday. The country's debt stock increased mainly due to a weak Naira over the longer term. Nigerian public borrowing rose by 27.72 trillion Naira over 12 months to 149.39 trillion Naira because of the weaker Naira inflated foreign liability. However, the US dollar remains near its weak level since February 2022 as traders consider dovish markets from the Federal Reserve Chair Jerome Powell and potential impact of Donald Trump's new spending proposal. The greenback out over near its lowest point since September 2021 against the euro and near a new low against the Swiss francs not seen since January 2025. Speaking at the European Central Bank annual gathering in Portugal, Powell emphasized that the Fed would proceed cautiously on interest rate adjustments, though he did not rule out a cut at this month's meeting, stating that the decision depends entirely on incoming data. This process adds significantly to Thursday's U.S. non-farm payroll support, especially after robust job opening data in the JOLT released the night before helped lift the dollar from Tuesday's low. Meanwhile, the dollar index, which measures the greenback against 6 major currencies, edged up to 96.774, but remained within the overnight range, which bottomed at 96.373 points. Traders are close watching headlines above Trump's expansive tax and spending plan. A package expert says could add another $3.3 trillion to the national debt. The measures is now headed back to the House for final approval or rejection after passing the Senate. Trump's ongoing criticism to Fed Chair Jerome Powell has raised questions about the central bank independence, adding political pressure that weigh on the US dollar. Trump showed Powell a chart of key global interests, annotated with his notes suggesting that US borrowing cost should be between Japan of 0.5% and Denmark of 1.75%. The Nigerian Stock Exchange market wrap up the first half of 2025 on a strong note, with all share index gaining 16.57% year-on-year to date. This marks the 6th consecutive positive first half performance since 2020, reaffirming investors' confidence and market momentum. The heavyweight index rose from an opening level of 102,928.6 points in January to close at June at 119,978.6 points, supported by a total market volume of 67.08 billion shares, with May and June recording the highest surge. Behind this rally were impressive performance from mid and large capital stock across major sectors, particularly consumer goods, banking and insurance. Here are some breakdown of how sectors indices performed. The standout performance for the half year was NGX Consumer Goods Index, which soared by 52.21%, making it the top gaining sector in the market. Consumer Goods Index opened the year at 1,731.7 points and closed at June at 2,635.9 points, gaining 904.2 points. Except for March, the index posted gains every month, with bullish momentum intensifying in the second quarter from April to June. Top drivers include Honeywell Flour Mill with plus 241.3%, Vitafoam with plus 221.74%, Champion Brewery plus 602.47%, International Breweries plus 150.45%, Northern Nigerian Flour Mill plus 146.01%, NGX Banking Sector Index 18.06%, tracked by the NGX Banking Index. The banking sector ranked second in performance for the first half of 2025, recording a year-to-date gain of 18.06%. The index opened the year at 1,084.5 points and climbed to 1,280.4 points by the end of June 2025, supported by a robust trading volume of 24.6 billion shares. While no banking sector soared over 100%, notably gains were Wema Bank with 67.64%, Stanbic IBTC with 47.57%, GTCO plus 42.54%, Zenith Bank plus 25.16%, Fidelity Bank 14.29%, and NGX Insurance Index 5.23%. The NGX Insurance Index recorded a modest but positive half-year gain of 5.23%, with a total trading volume of 11.8 billion shares exchanged over the period. The index opened the year at 719.9 points and appreciated to 755.5 points by the end of June 2025, with June emerging as the sector's most profitable month, leading the sector with advanced NEM Insurance plus 63.47%, Linkage Insurance, which is plus 30.51%, Sovereign Trust Insurance plus 19.64%, Cornerstone Insurance plus 18.89%. Each of these stocks deliver among strong return, helping to drive the sector overall. Performance: NGX Industry Goods at 1.85%. The NGX Industrial Goods Index posted a modest gain of 1.85% in the first half of 2025, ranking as the fourth best performing sector tracked by the NGX Industrial Goods Index. The sector opened the year at 3,572.2 points and inched up to 3,638.2 points by the end of June, on a market volume of 1.85 billion shares. February stood out as the sector best performing month, with the index closing in the green in the 3 out of 6 months. However, June ended with the red slightly pulling down the sector overall momentum. Top gainers in the sector include Better Glass with plus 414.56%, Beja Paints plus 50.00%, Cortex with plus 42.61%, Chemical and Allied Products PLC plus 34.08%, Lafarge Africa plus 24.66%, Maya PLC plus 19.22%. Despite these gains, an 8% decline in Dangote Cement, the sector heavyweight significantly reduced overall performance. Oil and gas was the only major sector to close the first half of 2025 in negative territory, recording a 10.12% decline. The index, which began the year as 2,712.1 points, fell to 2,437.5 points by the end of June, losing 274.6 points and finishing in the red for the 5 out of 6. While Eternal surged 76.95% and Total Energy posted a modest of 1.00% gain. The sector overall performance was dragged down by losses in the key players like Seplat, Adel, and Oando. The Nigerian Communication Commission has approved a 3-year national roaming agreement between MTN Nigerian Communication PLC and Emerging Market Telecommunication Services Limited, Nine Mobile, enabling Nine Mobile subscribers to access MTN network infrastructure across the country. In a statement released to the Nigerian Exchange and the investing public, MTN Nigeria confirmed that the agreement will span 3 years, following Nine Mobile subscribers to access the roam on MTN Nigerian expansive network infrastructure across the country. Under this arrangement, Nine Mobile users can now seamlessly access MTN's network coverage in locations where Nine Mobile lacks adequate infrastructure, improved collaboration, and operational efficiency. According to MTN, the agreement will foster industry collaboration and enhance operational efficiency. It also provides an opportunity for the sustainability of the telecommunication industry and promotes better use of existing infrastructure while expanding access to mobile connectivity. MTN Nigeria CEO Kyle Toriola expressed optimism about the deal and its broader impact on the sector. He says delivering the scale required for telecommunication in Nigeria requires strong collaboration between the private sector and the public sector and long-time investors. In contrast, Nine Mobile holds just 2.8 million active subscriptions, accounting for a mere 1.72% of the market share. The operators has faced a consistent decline in customer base due to years of poor service quality. Unlike other major operators which recorded subscribers growth between February and March 2025, Nine Mobile figures remain static. The stability recorded between February and March is attributable to customers' inability to port out of the network in the period. The Nigerian Communication Commission has consistently advocated for telecom operators to adopt infrastructure sharing models such as shared towers and fiber network as a way to reduce capital and operating costs while expanding access. Recall that in 2020, the Commission first approved a trial roaming service between MTN and Nine Mobile in Ondo State with the goal of evaluating its impact on service delivery. The pilot was part of a broader strategy to create a competitive and sustainable telecom market. One of that priority assets over the proprietary infrastructure was expansion. All right, let's take a quick short break. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point on Global Television, a program that highlights the activities of the Nigerian economy and government policies. The Organization of the Petroleum Export Countries has projected a potential shortfall of 23 million barrels per day in global oil supply by 2030 if upstream investors fall short of the estimated $17.4 trillion needed to meet future demands. OPEC Secretary General Heitman Aigaz made this disclosure during the 24th Nigerian Oil and Gas Energy Week conference and exhibition in Abuja. Aigaz noted that meeting the world growing energy needs by 2050 will require sustained and large-scale investment across the oil sector, as outlined in the OPEC long-term projection. The Organization of the Petroleum Export Countries says its research estimates a huge market deficit of 23 million barrels per day by 2030 if investment in the global upstream industry stop. OPEC also says the global cumulative oil-related investment of $17.4 trillion are required by 2050 to meet the energy's demand. Aigaz says that to meet the world growing need for the energy investment level in all energy must increase significantly. It says OPEC World Oil Outlook saw global primary energy demand growing by 23% between now and 2050. Noting that the global energy consumption is expected to increase by 23% between now and 2050, driven by factors such as population growth, rapid urbanization, and economic development. Despite the shift to cleaner energy, OPEC projects oil still lead the energy mix at nearly 30% by 2050, with oil and gas together supplying over half of global energy needs. Aigaz stressed the importance of developing countries using their natural resources for growing, noting that innovation is driving cleaner and more efficient solutions across the oil and gas value chain. Recall that in May 2025, President Bola Ahmed Tinubu signed an executive order introducing performance-based incentive for upstream oil operators who meet cost-saving benchmarks set annually by the Nigerian Upstream Petroleum Regulatory Commission. The initiative is aimed to lower project costs and attract more investment into the sector. Also, Presidential Advisor on Energy, Oluve, warns that Africa must implement competitive and transparent policies to secure oil investment, noting that upstream capital to Africa is expected to drop from $340 billion in between 2011 and 2015 to below $130 billion between 2026 and 2030. This warning aligns with OPEC's call for increased investment to avoid future global supply disruption. Top internet service provider in Nigeria, including Starlink and Spectranet, have recorded a significant drop in their customers' number as Nigeria cut spending on internet service. According to the latest on the ISP data released by the Nigerian Communication Commission, total active customers across is 127 IPS, whose data were made available, dropped to 289,369 as of first quarter of 2025 from 307,946 recorded in the third quarter of 2024. Specifically, Starlink, which jumped to become the second largest ISP in Nigeria last year, recorded its first loss as its customer base plunged from 65,564 in the first quarter of 2024 to 59,509 in the first quarter of 2025. showing that over 6,000 users had ditched their subscription within the period. In the same vein, Spectranet, one of the oldest ISPs in Nigeria and the largest in terms of customers' numbers, also recorded a decline in the subscribers. According to the NCC data, Spectranet active customers declined by 2,189 from 105,441 in the third quarter of 2024 to 103,252 in the first quarter of 2025. The third largest ISP by customers number, FiberOne, saw the largest decline in active customers as its database plunged from 33,010 in the third quarter of 2024 to 19,000 in the first quarter of 2025, losing over 14 customers. Industry analysts have attributed the decline in the number of ISP customers to several factors, key among which caused, according to an innovation and technology policy advisor and the founder of GDO.com, Jide Awe, says the ISP are also feeling the impact of the economic reality in Nigeria, which have forced Nigerians to cut costs, while ISP customers are predominantly business, unlike mobile network that cater mostly for individuals. Awe added that many business may also switch to mobile network due to affordability and flexibility compared to the fixed ISPs. The president of the Association of the Telecommunication Company of Nigeria, Tony Emekpere, says the recent move by the mobile network operators into fiber to the home service, the terrain where only core ISPs had been playing, is a factor. According to NCC database, there are currently a total of 234 companies licensed as ISPs in Nigeria. However, going by the customers' data just released, only 127 of the ISP had active customers as of first quarter of 2025, with a cumulative 289,369 customers. There is a wide gap between ISP and the mobile network operators, as the four MNOs remains the dominant players in the internet market. All right, this is where we draw the curtain on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 265 on Star Times. To stay connected, kindly follow us on all our social media handles at Global TV NG. Till I come your way again, I am Kikelomo Okeri. I celebrate you all.